Hey everybody, it's Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. It's a soap opera. It keeps going on and on and on. Today is Wednesday, August the 7th. Hope everyone's having a great summer so far. Things are winding down over here in Florida. My daughter starts school actually on Monday, so she's back at high school. So I know different parts of the country, start earlier or after Labor Day. So with respect to school, so it's changing here, and we're gonna be back to normal next week in a couple of days, believe it or not. So listen, if you're new to our channel, realize that I speak a lot about the housing market, the real estate market, values, price points, mortgage rates, things that are going on, iBuyers, brokerage firms, whatever is impacting the housing market, that's making a difference in our lives today. So we know that there's low inventory, we know prices are high, and we are hoping and praying, and there's a lot of signs that are there, as you can see that we're in a housing bubble, we're in a price bubble right now, and things have to change. So if you'd like more information about that and to be notified of when things happen, if you could please click the button on the bottom right of your screen there and subscribe to our channel. I certainly appreciate that. So thank you very much. Now, as well, I also mentioned to people, if you're looking for information on buying, selling, real estate investing, distressed properties, foreclosures, short sales, whatever, please send me an email and we'll get back to you as soon as possible, and I can help you with all that. So again, interesting stuff here, but I'm working on a program. It's a training program, an education program. I've mentioned it before. It's called my Never Pay Retail Training Program. And the whole idea is to basically provide education and information from both a real estate broker / realtor perspective and investment perspective, and kind of blend the two that can really help everyday people, the average buyer, the average real estate investor, find deals, get value in whatever they do with real estate. So that's what I'm doing right now. And I know that some of you inquired about that, so I'm actually building it. I've been working on it for the past few days, and I've been sort of taking, we'll call it, reservations for those people who want to jump in and help with the program. The whole idea is that I'm developing an education program, but I need your input, because I can talk and wax poetic about a lot of certain things in the real estate field. However, I need to know what everybody is thinking and what they want to know and what topics are most important to you guys out there. So that's why I'd like to engage people. If you want to jump in my program, and the benefit is you have access to me all the time. You can help contribute to the creation of topics you want to talk about. You're going to get a sweetheart discount when you jump in the program with me now. So please reach out to me. I know I've got some people who've already come forward, and I'll be reaching back out to people tomorrow to start that process, because I've got enough started here. I've got my framework, and I'd like to engage people now and start to really create what people want to hear about and want to learn about. So please reach out to me if you want more information about that, and I'm going to start loading people up on tomorrow. So there you go. So today's topics, again, I'm really get into it. Listen, it's been a pretty slow week with respect to news that's out there. A lot of financial things have been going on, and that's kind of obvious. But as far as housing, not a heck of a lot of news, so this will be a fairly brief video. But today's topics, I'm going to look at what I call conflicting information once again. Who do we believe? So who do you believe when you hear what's going on out there? It's difficult, to say the least. We'll talk about the top 10 best and worst home flipping locations across the country. And we'll take a look at the Bay Area, so the San Francisco Bay Area, because apparently home sales have crashed there last month. So there you go. So let's get going on this. So basically, excuse me, what I'm looking at here is housing sentiment has reached a record high as bidding wars vanish. So falling mortgage rates and strong employment information drove consumer confidence in housing to a record high in July, according to a monthly index that's created and monitored by Fannie Mae. So there you go. So Fannie Mae's telling us we're at a record high of housing confidence. Now, at the same time, bidding wars ease thanks to lower demand in some of the hottest markets. So very interesting. So falling mortgage rates and strong employment drove consumer confidence in housing, according to a monthly index from Fannie Mae. At the same time, again, the demand for that in some of the hottest markets are allowing more people to buy, and they're seeing a little more drop in price, which is great there. Now, according to Redfin, so this is a news report from Redfin, and Redfin's a real estate brokerage firm. Excuse me, just 11% of offers written by Redfin agents faced a bidding war in July, which is down from more than 45% last July in 2018. So basically, again, this is Redfin, and they're good about publishing their statistics. This is based on Redfin agents writing offers for their clients. So it's not the entire world of real estate. It's this small segmented group that reports on this. But again, they've come and said that they've seen a significant drop in bidding wars, which seems to make sense across the board because we know that there are less buyers looking right now. So on the local level, it's noteworthy because 2018 apparently you could say it was a fiercely competitive market, and San Jose, Seattle, LA have all seen their bidding war volumes plummet the most year over year. And San Diego, I guess you could say, was still the most competitive, one of the most competitive places. 21% of Redfin offers facing competition. Boston came in at 16%, LA 16%, Philadelphia 14%, Denver 14%. So those are still locations that are seeing some bidding wars, but Miami, the least competitive market, with 1% of offers facing competition. Houston, New York, Dallas, Vegas also saw lower than average competition, which is really, really good. So I look at it going, again, little signs here and there. So, is housing demand there? We're not too sure. But if you go take a look at, so what's Fannie Mae telling us? Fannie Mae is saying housing sentiment is at record high. That means more people believe that they should go out and buy a house, and it's a great time to buy and sell houses in today's marketplace. All right. But we see bidding wars dropping, which means there's less competition. So that could tell you that either prices are dropping and buyers are getting deals without competing, or there's just less buyers out there. So keep that in mind. Because I'm going to talk about another article that came out that says refi spike, homeowners pull back, or home buyers pull back. All right. So basically, refinances drove the recent volume in, I guess you could say, mortgage applications. Mortgage applications rose 12% for the week and a stunning 116% from 1 year ago. So obviously, the driver of that is refinances. So basically, they're the ones that are driving the volume. And again, they rose 12% for the week, and again, the stunning 116% from a year ago. Purchase applications, though, fell 2% for the week, the fourth straight weekly decrease. So I guess you could say that the buyers are, what do they say here? Ironically, buyers may be souring on the U.S. market because of reasons behind the interest rate drop. Initially, concerns over the durability of the U.S. economy, escalating trade war with China, as well as shaking consumer confidence. So this is what I like to talk about, is the fact that what information are we getting and what are we listening to here? So you've got one article that basically says, hey, everything's great. Consumer or home buyer or home sentiment confidence is up again. Great time to buy and sell property, from Fannie Mae. So we know who's behind that. And then you basically have MBA, which is a Mortgage Bankers Association, saying, well, here's what we're seeing with respect to mortgage applications. We're seeing further declines and decreases in purchase applications despite lower rates. So again, we're going to use that tagline. You can talk about the housing market, what's going on, despite lower interest rates. So interest rates have dropped. The Fed obviously, dropped their rate 25 basis points the other week. Apparently now it's the time we're on the lowest rates for quite some time for interest rates for mortgages. Purchase apps are still falling. So, and again, I look at that. I look at where we are. Here we are. It's August the 7th. We're at the back end of summertime. So we're going to see less people going out buying homes. We see that purchase applications are going down, and we see that refis are going up. So for me, what that tells us, our market is slowing. And when refis go up, that means those people who are, who either, in my opinion, have decided not. Well, you could refi for a number of reasons. You can just get a better rate and pay less. You can cash out refi if your home is valued at a certain value and you don't think you're going to sell it, or you might be better off paying, taking cash out. You're going to pull cash out. When you do that, now your home is effectively off the future sale market in housing, as far as I'm concerned. So I think when that happens, that just means less houses for sale, because again, you're refining, you're taking more, you're equity stripping your house. Yeah, you got a great favorable rate, so maybe your monthly payments are still really good, but now that payoff number is substantially higher than it was prior to refi. So again, this is where people may get caught in the future if they have to sell and markets shift and housing values drop. Now they got to deal with that refi, the new refi volume, and deal with that. So there you go. So again, but my point to everybody is conflicting information. Simple as that. So on one hand, sentiment is up, everything's great. Other hand, the numbers are showing that buyers are not buying despite lower interest rates. So again, that's the tagline. Despite lower interest rates is the caveat we got out there. All right, excuse me. Here are the top 10 best and worst places to flip a house in the U.S. A recent survey study done by a group called Wallet Hub looked at 172 cities across the country and ranked them based on market potential, renovation, remodeling costs, quality of life to determine the best and worst places to flip a home. So again, market potential, renovation, remodeling costs, and quality of life to determine your best and worst locations. So let's talk about the best locations to flip a home. Number 1 would be Sioux Falls, South Dakota, Missoula, Montana, Rapid City, South Dakota, Billings, Montana, Peoria, Arizona, Tampa, Florida, where I live, Fort Smith, Arkansas, Greensboro, North Carolina, I think it's La Cruces in New Mexico, and Boise, Idaho. So when you look at the top places here, the top 4 locations are South Dakota and Montana, which aren't really huge population bases as far as I'm concerned. Now listen, I've never been there. Don't want to insult anybody who has or who lives there. But great places to flip a home for those reasons. I don't know what your housing market is like. Great place to flip a home, but again, is it a brisk housing market? I'd say not. Obviously, North Carolina is interesting. Greensboro, got a place in New Mexico, and you've got Boise, Idaho. Now I know Boise has grown and has had its ups really with respect to people relocating from the West Coast, moving into Boise. So interesting, that's still a good place to flip a home. Now, Wallet Hub's list of 10 worst locations to flip a home is Los Angeles, California, New York City, New York, New Haven, Connecticut, Boston, Massachusetts, Wilmington, Delaware, San Francisco, California, Oakland, California, Newark, New Jersey, Yonkers, New York, and Bridgeport, Connecticut. So we can take a look at, you've got West Coast and Northeast concentration right there. All when you got Connecticut, New Jersey, and New York, and Boston, that whole area up there. So why is it the worst place to flip a home? Well, again, when it boils down to marketability, renovation costs, quality of life, probably these are higher tax locations. So there's more cost involved. I mean, we can get into each one of these things, but high concentration in California, high concentration in the Northeast around the New York City area. So there you go. So that's your top 10 and worst 10 markets to flip a home. All right. Bay Area home sales crash in June swoon. Now this is interesting. So San Francisco Bay Area home sales weekend in June crashed to the lowest levels not seen in over 11 years. So we know that we've been tracking the Case-Shiller, data. We've been tracking, what NAR, National Association of Realtors, puts out with existing home sales. We've all, excuse me, guys. We've been tracking also, home builders and lack of sales in home builders, and the home builders median price points dropping as well too. So we see downward trends. There's no doubt about it. There's downward trends here, and essentially, this was reported by the Mercury News, which is probably a local newspaper up in that area. But again, lowest levels to not seen over 11 years. Existing home sales plunged 13% last month from the previous year. So June existing home sales were the lowest level since 2008 real estate meltdown. So again, the sales were basically, I guess you could say, when the crash happened in the area. So it was melting down 2006, 7, and 8. Lowest sales volume was then, and it's happening right now, lowest sales volume. Now, again, there could be different reasons, right? Well, lowest sales volumes, well, again, it could be the same thing as far as I'm concerned. It's just prices were out of control, and people just have said they're not going to do it anymore. Year-over-year sales crashed in a lot of the counties, 21.7% in San Francisco County alone, believe it or not. So when you look at the numbers across the board, and I'm going to post this little chart in the community tab section of our video here, so you can actually take a look at it. It saves me listing all this stuff off. But in the end, the sales are down 12, almost 13%. And the median price across the board through all the San Francisco Bay Area counties did drop minus 2.3%. So we actually seen less sales volume, and we see drop in median sales price, which is interesting to know. So we're seeing that. So my previous videos, which was a Case-Shiller video, we saw that Seattle had actually a drop in value It went negative year over year, which is interesting. And now, at least from the this is more real-time sales as opposed to Case-Shiller index, but we're seeing a 2.3% drop in the Bay Area as well too. So again, across the board, prices have hit a point where people have just stopped responding. So there's going to come a point in time. It's part of a housing bubble concept, is the fact that everything goes up and up and up, and people just want to put their property up, and their real estate agents tell them to list it up here. Again, because you can always drop your price, you can't raise it. So list it as far as you can. Make sense. We'll roll the dice and see what happens. And guess what? The buyers aren't coming. And the buyers are going, I can't afford this anymore. And we know that home price appreciation has far outpaced wage growth everywhere across the country. We know that in certain locations of the country, like California, the taxes are high. It's forcing people out. The median income to buy a home in sort of the San Francisco Bay Area is extremely high. A lot of shift in housing going on here, and people are leaving, going, they want to deal with it anymore. So again, this is what's going to happen as more properties come on the market. They sit there longer. People need to be more competitive in when selling, and we'll start seeing more and more price reduction. So that's very interesting where this is at. But basically, the comment here is, in the last year, the entire market has shifted from a seller's market to a buyer's market now, which is really kind of cool. So from a lot of the real estate agents or brokerage ownership people to say, we've gone from the sales being seller's market being the key here, everybody bidding, et cetera, et cetera. We're not seeing that anymore. Now we're seeing buyer's market, reduction in prices, things like that. So again, I think this is telling. Realize the time frame of this. This is June. So this is June numbers, and when we talk about that, that's where things are happening. So I look at June and July as being two primary months, whereas a lot of sales activity should be occurring as we talk about the traditional relocation, move from point A to point B, do it a certain period of time, get everybody, get little Johnny and Sally registered for school in the new school zone. All these things happen now. And if we're not seeing, increases in sales volume and huge increases in sales price or whatever, it's going the other way during the busier times. To me, that's the indication. That's a fairly good indicator that once September, October, November hits, the slide will pick up quite a bit. And remember, folks, recession. We know with all the recession economists, pundits, whatever they're called, analysts out there, they're talking. First quarter of 2020 is when people believe the majority believe the recession will hit, and that certainly will affect housing. Will housing be the reason why there's a recession? No, it won't be the reason. It'll be a contributing factor. But again, we're seeing the slide here, and as I always have said now, it's excruciatingly slow. We see a slide every month. I'm waiting for the stats to come out. I'm going, where are we at? Where are we at? And yes, we see the little median price upticks. We still see some year over years, but the values increases are getting smaller. Some locations, the values are dipping below the line now, so they are changing, and that will start to pick up as time goes on. And again, validating this, this validates with respect to the lack of buyers going on. So we know from the mortgage applications, and despite low rates, that it's not enticing people. So we know it's a price point thing, and buyers are content to wait this out. So that's how I take it. If you don't have to buy, stay put. Yeah, I might pay a little bit more in rent or have to deal with that for another year or maybe 6 more months, etc. But I know that if I wait, I'm probably going to see what I'm going to consider material discounts and a better time frame when I can purchase. And by the way, if rates were lowered, and the prediction, by the majority of the financial banks and analysts out there, financial groups are saying at least one, if not two more small rate decreases September and December. So if you're a buyer looking for decreases in price point, interest rates are not going to be a factor to push you. You're not going to be scared off by a rise in interest rate. They're either going to maintain it and be stable, or they're going to decrease, which will be even better for buyers in the near future. That's a scoop, guys. So once again, thank you very much for your views, your comments, your likes. Please share the video, help my channel grow. If you're not already a subscriber, please click the subscribe button. I really appreciate that. Also, feel free to reach out to me and comment and discuss real estate. As I mentioned before, my Never Pay retail program, I'm working on that, and it's the cool part about it, the beta test, which I'm doing, really needs your participation. So if you want to get involved, learn some real estate, help, contribute to a program, give me feedback and tell me what you need to know. I can rank everybody's opinions and then I can develop stuff that you actually want to learn and know about yourself. So it's really, you're customizing your own program here, which is kind of cool. I've got a baseline of what I'm going to teach, but I've got stuff that I'm waiting to hear from, I'll hear from the masses of people who want to join, and we can go from there. So once again, thank you, and I'll do another video probably before the week's end, so we'll talk to you soon.